All right, so today we're diving into the powerful, and I mean really powerful, no-nonsense wisdom from J.L. Collins' book, The Simple Path to Wealth. This whole thing was born from a single, pretty simple request.
It all kicked off with this one sentence. His own daughter said this to him. And that's exactly why this book and this incredibly straightforward path even exists. It's for all of us who want to be financially secure, but don't want to make finance our entire life's work.
And that really is the core of it, isn't it? I mean, let's be honest. The default setting for most of us is to be kind of stressed out and confused by money. But what Collins argues is that there's a simple, almost elegant way to take back control. And it all starts by tackling the biggest monster first.
So what's that first major roadblock? Well, it's something that most of us have been taught to see as completely normal. We're talking about debt.
Okay, you have to appreciate the language he uses here. It's so visceral. He doesn't see debt as a tool or as good leverage. No way. He sees it as a parasite. Think about that for a second. Like being covered in leeches that are just slowly draining your money, your energy, and your freedom. It chains you to your job. And his method for getting rid of these leeches? It's just as direct. There are no fancy tricks here. You list out everything you owe, you get absolutely ruthless about cutting your spending, and then you throw every single spare dollar you have at the debt with the highest interest rate. For Collins, this isn't some friendly suggestion. It's the absolute non-negotiable first step to getting your freedom back. Okay, so let's say you're finally free from the leeches of debt. What are you actually working for? What's the end game? It's not just about some far-off concept of retirement. It's something way more powerful and way more immediate. This is the real goal, what he calls FU money. It's the point where you have options. It's the power to walk away from a terrible boss or a toxic job or a life path that just doesn't feel right anymore. It is, at its core, the ultimate form of personal freedom. And this shows you perfectly how it works in the real world, using his own life as an example. It's not this all or nothing thing. See, even just having $5,000 saved up gave him the leverage to negotiate a trip instead of just quitting. A bit more savings, and boom, he could walk away from a job he hated. And eventually, full financial independence gave his family something priceless: time together. Freedom is built one step at a time. So the big question is, how do you actually build this FU money? What's the secret formula? Well, believe it or not, the entire philosophy can be boiled down to a single powerful sentence. Spend less than you earn, invest the surplus, and avoid debt. That's it. That's the whole playbook. Everything else, he says, is just background noise. We've already talked about avoiding debt, so let's dig into the other two parts. It sounds simple, right? But simple isn't always easy. To really hammer home that spend less idea, he tells this brilliant little story. You've got the minister who gets rich by serving the king, but he's totally dependent on him. Then you have the monk who learns to live simply on rice and beans. He doesn't have much, but he's completely free. It's a powerful lesson. Freedom is found just as much in controlling what you want as it is in growing what you have. Okay, so you're spending less than you earn. You have this surplus. Now, what do you do with it? Let's talk about the engine that Collins says will power your journey to wealth. The stock market. And this visual is so important. Look at this. The Great Depression, Black Monday, the dot-com bust, the 2008 financial crisis. I mean, at the time, each of these felt like the absolute end of the world. And yet, despite all those terrifying drops, the overall trend is undeniable. It just relentlessly goes up. That's not a guess. That's 100 years of history. But why? Is it just some kind of magic? Not at all. First, you're owning tiny pieces of real, breathing businesses full of smart people trying to grow and succeed. And second, the market is self-cleansing. Bad companies fail and vanish, but the good ones, well, they can grow 200%, 1,000%, even more. The worst you can do is lose 100%, but the upside is literally unlimited. That creates this powerful upward pull over time. And this might be my favorite analogy in the whole book. He says the market is like a mug of beer. The beer at the bottom, that's the real underlying value of all those businesses. The foam on top is all the daily price swings and the hysterical media noise. Your job, your only job, is to ignore the foam that causes panic and focus on the beer. That's where the real wealth is built. Okay, so we get the engine. The stock market is the way to go. But how do we actually get in and drive? Well, the book suggests one single, remarkably simple vehicle to do the job. Collins's choice is a total stock market index fund, specifically Vanguard's VTSAX. And just look at this comparison. The index fund's goal is simple: just match the market and do it for an incredibly low cost. The actively managed fund has some highly paid genius who tries to beat the market. The results? Well, they're pretty staggering. I want you to just let that number sink in for a second. 82%. Over a 15-year period, 82% of those high-paid professional managers failed to beat a simple, cheap, automated index fund. Simplicity isn't just easier here, it's statistically proven to be way more effective. All right, now for the final and honestly the hardest piece of this entire puzzle. You can have the perfect strategy, you can have the perfect investment vehicle, but none of it matters if you can't master your own psychology. This is it. This is the question that paralyzes everybody. We saw that timeline. We know crashes are not a matter of if, but when. So what on earth do you do when it looks like your life savings are just evaporating in real time? This right here is the most powerful mindset shift in the entire book. You have to train your brain to stop seeing a market crash as a disaster and start seeing it for what it truly is for a long-term investor. A sale, a massive everything must go fire sale opportunity to buy more of your investments at a huge discount. And, he learned this lesson the hard way. He freely admits that during the 1987 crash, he panicked. He sold out near the bottom, cementing those huge losses, only to watch in agony as the market roared back without him. It was an expensive, painful mistake, but it taught him the single most important rule of the game. You have to stay the course.
And that brings us to the book's most famous, most unforgettable line. It's blunt, it's a little provocative, but it's a call to action. The path is simple, the tools are simple, but this journey requires real emotional toughness. So the final question is, can you do it? Can you ignore the noise, stay invested when everyone else is freaking out, and trust the process? That's the whole game.